Hello and welcome to the RANsquawk weekly wrap-up video. I'm just going to take a moment to answer a couple of questions that have been sent into the desk this week. So the first thing we're going to talk about is the Greek situation. It has continued to dominate for much of this week. In terms of what we've seen, the deadline for the bond swap was last night at 8 o'clock. We did see continued rumours throughout yesterday's session of a better than expected participation in the bond swap deal, and this saw a move higher in equities and in euro-dollar throughout much of yesterday. In terms of the actual release, it did come in the early hours of this morning from Greece itself, where they said that 85.8% of bondholders had submitted for the debt swap agreement. We also saw comments this afternoon from EU's Juncker that he had been notified by Greece that they would enforce CACs to fulfil the debt swap agreement. It's also worth noting that we had some comments from the ISDA just a few moments ago that they would look to comment on whether the Greek bond swap had been a credit event once they've received official notification from the Greek government that CACs had been activated. So in terms of that announcement, is widely expected to come at some point this evening. So we'll also keep a firm eye out for any further developments on the Greek situation over the weekend. So looking forward to next week, it is going to be slightly quieter regarding the Greek situation. Monday sees a EU finance ministers meeting. In this meeting they're widely expected to discuss the Greek bond swap, and they're also likely to confirm the Greek bailout package, which was anticipated to be firmly agreed after the bond swap deal had gone through. So that should happen at some point on Monday. So looking over across the Atlantic at the US, today saw the non-farm payrolls for the US, in which the headline non-farm payroll figure came out at 227,000. This was 17,000 above the consensus. The unemployment rate was in line at 8.3%. We also saw an upward revision to January's data as well. All this was taken as a positive by US equity markets, and they've continued to outperform it for the day over here. In terms of looking at some of the figures, some of this was boosted by some temporary hiring. However, this has been largely ignored by the markets, and they continue to outperform on the US improving economic picture. So looking forward to next week, one of the key things to look for will be the FOMC rate decision. However, it is unlikely to be as eventful as the previous rate decision. This week's rate decision is only a one-day event. It will not have a conference from Fed's Bernanke. As usual, all analysts are expecting the rate to be unchanged at 0.25%. In terms of some other things to look for, it's very unlikely that we'll see any economic forecasts from the Fed as well. And we're also unlikely to see any hint of future policy regarding easing. However, it is worth noting that there were reports in the press this week that the Fed are potentially considering some further easing options. These include sterilising bond purchases or extending Operation Twist. However, considering Operation Twist is due to go on until the end of June, it's unlikely the Fed are going to commit to any additional easing for the next couple of months. So that's it from us for the week. I hope you had a great week and have a great weekend, and we'll see you again on Monday.